Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. The Nasdaq hit 10,000 today. The melt-up continued there. The S&P took a little bit of a pause. We look to the Federal Reserve to finish their two-day policy meeting tomorrow, 1 p.m. Central Time. They got a statement. Fed Chair Powell, 30 minutes after with the press conference. We get economic indicators from them, or their economic expectations going as well. So those are all going to be closely watched. But almost just as important as the Fed is what's going on over the next couple weeks here, because June 19th is quadruple witching, and then after that we potentially see some quarterly rebalancing. And something that I've been writing about quite a bit over the last week is the stretch for yield. Amazon last week raising $10 billion and 3-year debt at 40 basis points. There is a stretch for yield. Money needs to go somewhere, and what we're seeing here too is 10-year Treasury yields rose to about 90 basis points, just above 90 basis points. I'll show you the chart in a minute. Yesterday, the yields backed off a little bit today, but as yields do rise, you're going to see that really do the job for the Fed without the Fed actually having to be less dovish. But as that plays out, it plays out into June 19th next week. And June 19th, quadruple witching, you're seeing just everybody's talking about the Robinhood investors, everybody's talking about retail investors just piling money into the market. And not only was just buying stocks not enough for them, you're seeing options purchasing. And as options get purchased, that's really that push higher, that really stretching things. But what it does is you have market makers now selling those options to retail investors. Those market makers then got to lay off the risk by buying stock, which then makes stocks go higher. So that's what we're seeing is this melt up. June 19th on that quadruple witching, all of that expires, or a lot of it does. I mean, obviously options after that don't, but a big options expiration creates an unwind, and that could really be a day of reckoning. We could see this market turn down quite a bit from there, and we do believe we're going to see the market top out, but we could see it really rally, and I talked about it yesterday, melt up into this. So we see the Nasdaq hit 10,000 today. Our next big level of resistance really is about 10,035. Nothing's to say this thing can't stop into June 19th, and then from there you also have a quarterly rebalancing where pension funds with trillions upon trillions of dollars need to rebalance. Portfolio managers are going to rebalance. Now you think about it, last time they rebalanced was when the equity markets were on lows, and the S&P's rallied 50% since then. So now you got the 10-year yield pushing 90 basis points right now, and just a week ago, it was about 60 basis points. So you're getting that little bit of better yield, and that's where that Amazon idea comes into play, because you're seeing those institutional investors put money into Amazon receiving only 40 basis points. So you're talking about just a minute difference in basis points, but that money needs to go somewhere, and it needs to stretch for yield. So we believe we're going to see a day of reckoning or a week of reckoning as you go into June 19th and after that. So be prepared, as this really could be a big unwind. Let's jump into the charts here, though. Here's the Nasdaq hitting 10,000. You see it here. This is just a steady climb, nice little support trend line. Again, what's going to throw this thing off until that options expiration? 10,000 has been achieved. Could it be a little bit of a sell the rumor area? No, we're not calling a top here. And again, the Fed's not going to do anything to derail this market, and they're going to let rates do it for them. The S&P. The S&P, this is a volume profile on here. It's a daily chart. A lot of volume in the past had traded at this about 32 in a quarter area. This is a major 3-star resistance. It was the high settlement yesterday. We're running into a little bit of a stall here. Good volume on the down. But again, what's going to stop this thing from melting higher? We certainly would not step in the way of it. And then let's go take a look at this 10-year yield. So these are the 10-year prices. We're coming back into the low of late March, bouncing off what is a little bit of support. The prices surged pretty good, and that about 137 is proving to be some support. 10-year auction steady today. The market bounced and stayed firm from that. Good demand. Now here's the yields. You're seeing the yield fail from that 90 basis points. 90 basis points is a level to keep an eye on, right below that psychological 1%. And you're going to see investors, those institutional investors, those pension funds, now just that little bit of more of a yield. If you see from that chart, you've seen this thing climb. It's climbed up 60 basis points, now 90 basis points. I mean, it's a 50% better. It may not sound like much more, but when you're stretching for that yield, similar to what Amazon offered, that's going to attract people, attract those investors as they rebalance portfolios. So What else is on our radar? Gold. Gold, it did stall today. The high on last Thursday session, before non-farm payroll, just below 1730, and it backed off. You can see that here. We did have major three-star resistance, 1725, 1726, a big area there. It fell back below, but still, it's a constructive week. Next thing it really needs to get out above, though, is 1740. 1740 is going to be that trend line from that last peak we saw middle of May. Gets out above there. We don't think anything's going to stop gold after that, and at least get it back up to 1785, potentially break out above there. And then lastly, let's check in on some of the currencies here. As I said, gold's rallied. The safe havens have moved higher. The treasuries have moved up. The prices in the treasuries, but we're seeing the yen here move up, 2-day run. It's weakened off the weaker dollar. The yen's back above what is that? Just straight across 200-day moving average. Constructive day here. Constructive week so far for the yen. But is it just a dead cat bounce? We tend to think so. We don't think the yen is really going to steadily move higher. But if stocks do correct, then the yen is going to fall back. So right here, it's just important to keep an eye on the yen for right now. And then as we look into the euro, these are just some areas. Obviously, the high going back late last week in the euro before it started falling back, and then you got the low this morning. So here's a range to look at for the euro. Outside of there, you could probably get some momentum. Again, we do think, I am a firm believer that the dollar is going to have value down here, and you're going to see the dollar rally second half of this year. Dollar is going to be very strong. And then just from this run alone, this is a positioning unwind. You're seeing a lot of short covering here in the euro. It's fueled this thing much farther than we think it should have run. But in a long-term sense, we do like the dollar. We think the second half of the year is going to be a great one for the U.S. dollar. And then lastly, we just got to touch on crude oil because it's at this. It did achieve $40 Monday to start the week. Sort of a little bit of a buy the rumor, sell the fact, sell the news with the OPEC extending their cuts one more month. But you do have this steady trend line climb here. Good support, major three-star support was tested today in the crude oil. So we go into inventories tomorrow. What you would want to see is ultimately you got $36, 36 and a quarter, close below there. A decisive close about 36 in crude. Could get a little bit of selling underway. Again, you're running into that big gap from March 9th, and that's going to be a lot of resistance. Achieved the $40 already. But again, what we're looking at this week, got the Fed, got CPI tomorrow morning, 7:30 a.m. Central Time, CPI, an inflation indicator. The Fed later in the afternoon. The Fed, we don't expect them, again, we don't expect them to rock the boat. Stocks can continue to melt up. But really what it matters is the reckoning that we could see here, June 19th, give or take a day or two before or after, and that's where you're going to see this market potentially top out. We do believe the market will top out, and then the quarterly rebalancing is going to weigh on stocks as well. Give us a call. We'd love to talk about this with you and some ways to position, whether it be stocks, looking at gold, the dollar, treasuries as well. So give us a call, 312-278-0500. And remember, though, futures trading involves substantial risk of loss and is not suitable for all investors.